Yes, Virginia, the stock market can go down. We're looking at a sell-off here. It's 9:30. The stock market just opened, already down 100 points right out of the gate. Look, it happens. It hasn't happened once this year. We may get a sell-off. Unbelievable, but it can happen. Morning, welcome to the Markets Hub. I am Paul Vigna, joined today by Mr. Michael Casey.
Jonathan Cheng's column today, maybe the kiss of death,
talk about
right?
timing, right? Oh my God,
no 100-point gain for 45 days, and sure enough, the day out,
100-point loss. 100-point loss. Yes. Look, maybe Super Tuesday elsewhere is not Super Tuesday in the market. It is a sea of red. Yeah. I mean, just about everything.
After 45 days, we can afford to have one, right?
We can afford to have one. Before we break down the market itself, let's talk about some of the things that are driving the market down today. One of them, little anxiety over Greece, maybe, maybe not. We'll see what happens with the bond swap deal, because right now we're going to get the latest from Matina Stevis, who's in Brussels. That was a mouthful. Good morning, Matina. How are you?
I'm very well. How are you?
We're doing all right, you know. Give us the latest on the bond swap. Where do things stand right now with this the creditors committee? Who's taking up this offer?
Right, well, our latest story is that about 75 to 80% participation rate is expected in the bond swap. Just a reminder, we're talking about an exchange of approximately 177 billion euro of Greek government bonds. That is not the whole deal. There's another 30 coming up in April, but that's in foreign law. Greece now exchanges its Greek law bonds. And the deal expires Thursday night in Europe around 8 o'clock London time. Our latest information is that about 75 to 80% of creditors will take up the offer made by the Greek government, but that's not enough because Greece wants 90% participation. They want as much participation as possible to really reduce their debt stock.
Right, because if they don't get that 90 number, that's when they have to activate these retroactive collective action clauses where they force the minority shareholders to take the deal, right, Matina? And I imagine that's when you start talking about...
Source of much confusion, right. Well, so far, last night here in Europe, we heard from 12 big financial institutions, banks, insurance firms, and one hedge fund saying that they would support the deal. By our calculations and by their own disclosures late last year, these positions may have changed. They hold around 40 billion euro, which is not a negligible amount. We are fairly certain that Greek banks, who hold a big chunk of debt, will also be going along with this deal voluntarily. So it looks like Greece is getting together this critical mass of creditors that will support the terms that it wants to impose to its creditors if and when things get to a collective action clause use, and then creditors will have to vote.
Right.
I was just going to say, you know, I love these stories. I'm 6 years covering the Argentine debt restructuring. What I love about these things is the game theory, the kind of weird machinations that go on where it's a prisoner's dilemma, right? You're trying to decide who, in fact, is going to go if you don't. And in this case, it seems to me that it's in the Greek government's interest not to sort of push that they're going to go above 90% because they want people to be scared. And if you actually think that people are going to get the 90% voluntarily, then you would actually opt out of it because you would then avoid the collective action clause. So there's this kind of grey area between the two. I was just ask a question, Christina, what are people saying about that game? How are they telling people to gauge the way other investors are playing through this?
Well, I mean, it's quite a special case, this one, and Mike, you and I have spoken about this before in the past, that because so much hangs from this Greek restructuring, and because we're not talking about a Latin American country, a developing country, we're talking about a member of the Eurozone, many investors don't want to be seen as to be obstructing or to be attacking the entire old continent.
It's a third element to the game, yeah.
But yeah, exactly. So what we're seeing right now is the big institutions, the big European banks and the Greek banks moving towards what we expected, moving towards an acceptance of this deal. Besides, just a reminder to viewers that these guys were actually at the negotiating table when Greece and the European Union and the International Monetary Fund were negotiating with the creditors. Some of these banks were represented. Now, the big parameters that we're looking out for are two. There's an unknown number of bonds, an undisclosed number of bonds with hedge funds, and they tend to be the actors who have developed strategies to obstruct restructurings through through holding out and through going to courts. And another question is, can these guys put their differences aside, come together and form a minority bloc? So can they form a group that will coordinate and will block the process?
There's many moving parts.
That's where we have to leave it. Matina, thank you very much.